Long-term wealth creation can be facilitated by purchasing dividend-paying stocks. Stocks in companies that regularly distribute dividend payments are called dividend stocks. These distributions, known as dividends, can give shareholders a steady flow of cash while also allowing them to benefit from the rise in the stock price. However, not every stock that pays a dividend is created equal. Some may have high dividend yields, but their earnings or financial stability are unreliable. Although the dividend yields on others may be lower, they are more reliable and have a history of consistent growth. To help you navigate the world of dividend stocks and find the ones that can make you wealthy, we've compiled a list of some of the top dividend stocks to consider. Number 10. Verizon Communications. Verizon Communications is a multinational telecommunications corporation that serves both individual customers and commercial clients by delivering wired and wireless communication services. Since its inception more than 3 decades ago, the corporation has maintained a pattern of annual dividend growth, which has resulted in an ever-increasing payout to shareholders. Because it serves such a large customer base and offers such a comprehensive selection of goods and services, Verizon Communications is able to maintain a consistent flow of cash. The dividend yield of the company is approximately 4.5% at the moment. Number 9. Coca-Cola. Coca-Cola is the most successful company in the world that focuses on non-alcoholic beverages. Over the course of more than a century, the business has maintained a pattern of steadily raising the amount of dividends it has distributed and currently pays out. Coca-Cola is able to maintain consistent cash flows thanks to its powerful brand and expansive distribution network, both of which enable the company to generate a lot of revenue. The dividend yield of the company is approximately 3.1% at the moment. Number 8. Johnson & Johnson. According to Finviz.com, Johnson & Johnson is a leading healthcare company that pays an annual dividend of $4.52 per share, while the company's trailing 12-month earnings per share are $6.74 per share. In terms of its dividend, Johnson & Johnson has increased its annual dividend for 61 years in a row, making it one of the market's most consistent annual dividend raisers. In addition, Johnson & Johnson is one of the most well-known companies in the world. Johnson & Johnson is investing for the long term, and many analysts believe that inflation in the United States will decrease to a fairly acceptable range within a few years. Despite the fact that inflation is a headwind, as it has been for many other companies due to higher costs, Johnson & Johnson is investing for the long term. Number 7. Visa Incorporated. Visa is a corporation that operates a worldwide payments network and offers a variety of financial services. The ability to engage in electronic transactions with one another is made possible by this network, which connects consumers, businesses, and financial institutions. The company has a long history of consistent growth, in addition to dividend payments, both of which contribute to a strong financial position that the company currently enjoys. Due to the relatively low dividend yield of approximately 0.5%, Visa is an excellent choice for investors who are looking to hold their investments for a longer period of time. Visa is a reliable and consistent dividend stock. Number 6. Apple Incorporated. Apple is one of the most successful technology companies in the world. The company's iPhone, iPad, and Mac computers are some of its most well-known products. In recent years, Apple has placed an increased emphasis on returning value to shareholders through the distribution of dividends and the purchase of existing shares. Although the company's dividend yield is only about 0.6%, due to its robust financial position and continuous growth, it is an excellent choice for long-term investors seeking reliable dividend stocks. Number 5. American Express. American Express is one of the best dividend stocks available, and financial services in general, including consumer and business lending, are another area in which you can find a handful of top dividend stocks. Despite the fact that it is not a dividend aristocrat, American Express has a track record of either increasing or maintaining its dividend throughout the course of several decades, regardless of the economic climate. That's a testament to its excellent lending standards and attention to higher-income consumers who are less likely to default on their debts during lean economic times. Because of this, American Express is a very attractive investment opportunity for people who are interested in owning a leading financial services company but are also concerned about the state of the economy. This is an excellent stock to purchase when broad market conditions are bearish and keep for the eventual recovery of bull market conditions. Number 4. Bank of America Corporation. The second largest bank in the United States, according to assets, is Bank of America Corporation. According to Barron's, Bank of America is sitting on the largest losses among the country's biggest banks in a key portion of its bond portfolio. Like other banks, Bank of America also makes investments in mortgage-backed securities and treasury securities. The value of those bond portfolios held by banks has decreased as a result of the increase in interest rates since the beginning of 2022. Given its size, systemic importance, and other businesses, such as a top investment bank, Bank of America Corporation may not pose a significant problem if interest rates don't rise by a significant amount. The dividend yield for Bank of America Corporation is 3.18%. Number 3. Microsoft Corporation. The Microsoft Corporation is a multinational technology corporation that is best known for its line of software for personal computers, consumer electronics, and online services. Since 2003, the company has been in the practice of dispersing dividends, and it has maintained a pattern of annual increases in dividend payments. The fact that the Microsoft Corporation possesses a powerful brand and a sizable customer base enables it to generate consistent cash flows for the company. The dividend yield on the company's stock is currently somewhere around 0.8%, but the company has been increasing the amount of money it pays out in dividends at a rapid pace. Number 2. J.P. Morgan Chase & Company. J.P. Morgan Chase & Company will continue to be one of the most important players in international finance, despite being the most powerful and influential of all the major banks in the world. It is the go-to in its industry for a wide variety of banking, wealth management, and other premium financial services for customers as well as businesses of all sizes. These services can be provided to individuals. J.P. Morgan Chase & Company is a global conglomerate that operates as an investment bank as well as a provider of other financial services. J.P. Morgan Chase & Company has a strong track record of dividend payments, as evidenced by the current dividend yield of 3.2%. The corporation has been distributing dividends to its shareholders for more than a century, and for the past 11 years, it has increased the amount of dividends distributed annually. Number 1. Chevron. The price of oil has rebounded. Stocks of oil companies like Chevron have soared in recent years, and the energy industry as a whole has been one of the best performers since the coronavirus pandemic. But if we're being objective, Chevron has been a decent stock to own, especially for dividend investors, for decades, thanks to its reliable cash flow and steady annual dividend increases, now totaling over $35 billion. Owning Chevron has proven profitable for dividend seekers over the long term, despite the stock price fluctuating wildly with the ups and downs of oil prices. Dividend stocks are long-term investments. Even the most consistently profitable dividend stocks are susceptible to significant price swings over relatively short periods. There are simply too many market forces at play, many of which have nothing to do with the underlying business itself, that has the potential to move them up or down over days or weeks. So while the aforementioned firms should be excellent dividend investments over the long term, you shouldn't be too concerned with their day-to-day price fluctuations. Instead, you should concentrate on locating businesses that have strong businesses, consistent income streams, and preferable, solid dividend track records. The problems of the long term will solve themselves. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.